to Burke & Smythe's yearly review for 2021-2022. As we stated a little bit earlier, we had Natalie in for property management. We've now got Jason Werrett, who is the sales manager and also fellow managing director. Thanks for joining us, mate.
No worries, my pleasure.
Got Jason back in, obviously, to review the year. How we go, mate? How from sales point of view?
Sales side of things, very strong year. So it was good all round, to be honest with you. So from I suppose a broad range of sales all over the place. So from land, subdivisions, just vacant lots, to your lower end properties, right up into the premium. So it was just, it was a good year all round. Good prices, very consistent through the year. As stock levels reduced, it certainly proved some urgency, and there was some great results to come from that as well. But no, it was a great year, and good to see Tamworth thriving, so it's great.
Yeah, and hopefully continuing. Did we see a change in price, do you reckon? Did you see?
Yeah, I think we still saw a change in price. Like if you look on the 12-month period, 12 months ago we certainly still had a rise from the previous 12 months in price levels, but I think the last year definitely shone stronger. So as I say, as those stock levels thinned right down, buyer demand just got stronger. Competition just pushes prices, as high as they can do. The market sets the price at the end of the day. So you would have seen a lot of properties be advertised as by negotiation or open to offers rather than having a set ceiling price, as just a result of the market. So that's for owners to take advantage of that marketplace and make the most they can out of it. So definitely it's been good, positive price across the year.
And I think we were talking before about 18 months, 2 years ago, if you purchased for 200 to 300, that was now 400-ish.
Yeah, pretty well. Yeah, certainly those. Where we would have considered first home buyers investor market, definitely lifted up. Certainly around 100k, depending on locations and improvements, but definitely on that side of things, and probably pretty broad across the range. Really, like it's hard to put an exact figure because some places may be even benefiting more than that. Some not quite as much, but from the bottom end of the range, certainly you can't buy much between 200 or 300 now. So they're certainly well into the 3s to early 4s, some even mid 4s. And that reflects on those rents too. I'm sure Nat would have explained like the rents have lifted to compensate for that too. So the returns are still there, even at this higher level.
Competition in property management equal as well.
Probably
even the newer stuff too, you think? Like
newer stuff definitely. Where new was probably a little bit slow a couple of years ago. You were looking at buying an established modern new home, comparing it to building, and you were probably thinking, it's probably better to build than it was to buy something. And then the tables turned, obviously, with the grants that were given out from the government from COVID to get the building industry pumped up. So that flooded the building market, land subdivisions, then they've gone through the roof. And the wait times and delay of land release now has then made people resort back to those newer homes. So prices on those certainly have gone very high, and it's hard to probably buy now in those new subdivisions below 700. Like they're really in the 700s now, and upwards from there. For your 4 2 and 2s on an average size block.
And time, I think too. Obviously, the build times are pushing with stock.
That's right. It's all delay of not necessarily the construction time frame. That's a little bit delayed, but certainly the DA process, the land registration process. And you've got to think, if you're doing that too, paying for rent or an existing mortgage while that's going on, potentially taking 12 months or more before you can move in and get the handover keys, is a lot of time and a lot of money outgoing. So it can pay sometimes to jump into those established homes, and a lot of people have taken advantage of that.
Definitely big change over the 12 months.
Definitely.
Start of the year, stock levels compared to stock levels now. And by stock levels, we mean what's available for the buyer, to buy. How many houses are available for sale? So do you see a change, you reckon?
I think we're still lower now than what we were at the start of 12 months ago. I think we had more probably in the lower range then. So we still had homes a reasonable amount of properties for sale between 200 and 400,000. You know, mid to high twos, well in the 3s to 4s. So more stock available. That has, because the investor side of things have been strong because the rates were so low. The investor market just went crazy. And they snapped up so much stock, it was, it's just gone. So there's not much available now, and I'm not sure whether that'll change anytime soon, to be honest with you. So,
I think that's probably off the back of, like, talking investors. Sydney or the city went crazy, Newcastle went crazy, the coast went crazy, so everyone went inland. I think they're just following.
And regional areas were marked as safe, not just because of COVID, but it was COVID probably made them look into it more. We were safe on employment. I think I've always said, you know, regional cities like Tamworth, and that we're hardened from droughts over the years, so we're used to slower economies and these sorts of cases. Not a pandemic, but you know, those struggling things. So we're able to handle it, I think, a little bit easier and glide through it much better than metro areas which have got much stronger peaks and troughs. So I think that's been a big part of it, looking at that, and still affordability. So even though we've had market rises, it's still affordable for someone coming out of the city. Where then, you know, an investment property is like, I don't know, $1 million plus.
Medium price.
And again, to the share market, you know, not crashing, but not far off it really, being so ordinary over the last, well, probably 2 years since the start of COVID or more. So you can't still be bricks and mortar.
Same option. Interest rate rises. So we've had two so far with the filming of this. The reason I put this in this video, we've had a lot of people ask, has it impacted us? And they're probably from out of the area. Where do you see it, mate? How do you think?
I think not. It's impacted only on a small scale. So I think people are probably, it hasn't affected the market in a sense of what they're not seeing, and we're not seeing our market level drop. So our prices haven't pulled back. Certainly not at this time. It's probably, I think, people that have been probably looking at their buying power right at the peak. When they've seen interest rate rises and threaded more, they're just pulling back now as a safer level. So it's not that the market's pulling back, just they're thinking more wisely about it, which is understandable, and their own affordability. So I think because we've still got a strong economy and employment's still good here,
still affordable.
We've still got a low, or very low supply of land for subdivision releases. So I think we're still going to have a bit of an undersupply of land, of houses for some time, which will keep prices afloat. And it should still carry on as we see it now, but obviously things will change at some point. But it's still very stable for now.
And you've got to think, you know, if anything changes, I don't see price changing, but you might see days on market blow out a little bit. Where it's been, you know, 28, 30 days at the moment, like 60, 90.
And that's only for homes that we've taken to market. So I think we'll probably transition from selling, you know, where we've been over 50%, we've sold off market. So not just through database of qualified buyers and registered buyers in there. I think that'll probably come down a little bit, and it'll go back to properties going on the market, back to a standard marketplace.
And lastly, mate, prediction. Got you on the spot. 3 months, 6 months, 12 months, whatever you think. Talk of a third interest rate rise maybe, but as we said, that probably won't impact us. But where do you think we'll be in 6 months?
I think I'm pretty confident that our prices are going to hold where they are. So market level, this will be a hit. You shouldn't see anything really pull backwards if land is still the price that it is now, which has significantly gone up. So if land's at that level and the cost of buildings at that level due to supplies, then that supports the price level of existing homes. So I think just on that alone, Tamworth's still a fairly strong designated area. Our market here, no commercial aspect, but there's plenty of commercial development, industrial development going on in the Tamworth area. So that's still going to bring people to town and make it a fairly desirable location. And I think all of those things combined will just maybe see our market activity plateau off, but prices still stay relatively similar to where they are now. You might see some small corrections, but you're going to see that in any market. it's never going to be a dead flat line. It's always going to go up and down.
Yeah.
So yeah, I think it's going to be okay, unless we see something crazy on interest rate rises. But I can't see another one or two doing anything. It's been out there for some time that they were going to do it. So, yeah.
Oh. And you've got to think that it's been so low for so long, something had to give.
It was always going to go up.
People have always got to move though, so I mean, we just work in that market.
Yeah,
whatever happens at that time.
There's always been a roof over your head.
Exactly.
So no matter what, there's always property to buy and property to sell. But yeah, I don't think anything's going to change anytime soon for Tamworth and the surrounding areas. It's
pretty strong, pretty strong.
Yeah.
Thanks, Chase, again. Thank you for tuning in on this special edition of the newsletter. Obviously, there is a second video we mentioned from Natalie from Property Management. I'll put some details from what Jace has mentioned below, and if you do want to reach out, have us have a look at your house and give you the latest sort of value on where you sort of sit in today's market, feel free to reach out. I'll put that in the bottom of the video as well. But next week we'll see you for the weekly property tips. We'll be back on doing the standard weekly thing, and thanks again for tuning in.
Thank you.
See ya.